The ability to simplify means to eliminate the unnecessary so that the necessary may speak, Hans Hofmann. And my friends, that's what we try to do and teach here every day, is to help us eliminate the unnecessary so the necessary can tell us what is going on. That is why we follow these trends. That is why we look at price movement, and that is why we focus on the price percent oscillator, because on the charts that we consider chartable, the price percent oscillator works again and again and again. As you guys have seen so far this year, 12 out of 13 times we have had a weekly vertical crossover, and that is when the price percent oscillator crosses over going up or down on any of our charts. And we're only looking at 4 charts on a daily basis. That is the S&P 500, the NASDAQ 100, 20-year bonds, and gold. And again, we do this just because we've got to narrow it down to something. So we look at stock indexes, we look at bonds, which should move typically conversely to the stock index, along with gold, a commodity. Now, we could choose any number of things. People say, can you chart stocks? Well, of course you can. Now, there's a number of additional considerations with stocks, such as warning season, earnings season. We've got expiration Fridays. The third Friday of every month is when the largest number of options expire. So you've got all sorts of exogenous events that also can occur that can affect stocks more than they would indexes, and that again is why we simplify it for our training and just look at indexes. But by all means, yes, backtrack stocks, work on those. Oh, by the way, great training for you today. This is finding your own aha moment. And those of you who subscribe, it'll be in your show notes. If you're not a subscriber, go sign up for free at chartingwealth.com. Put in your name, email address. That list is never spammed. It is never sold. Now, let's jump into these charts. Stocks are down for the day. Our 2 stock indexes, bonds and gold, are up. We will also be covering for interested parties after we do our first 4 big ones. We're going to look at Bitcoin. We're going to touch on silver. We will look at real estate, and we'll look at oil. Now, let's keep going. So, what do we see happening? We're going to go to the S&P 500 first. Remember, you always start with your largest chart. And what do we see happening? Let me move the 2-day crossover out of the way. We see that we have a red open candle forming. That means a slowdown in the up movement. We haven't hit a higher high this week. And again, we see a slowdown in the S&P. We also see that happening in the price percent oscillator and the derivative oscillator losing energy. Go to the 2-day chart. We have a 2-day crossover. I already moved the line, but I did not change the arrow. I've just done that. Folks, that's how easy it is to use TC2000, the free version, freestockcharts.com. You'll see a link in the show notes to a $25 discount if you sign up for TC2000. I don't know why everyone listening who's serious doesn't subscribe to TC2000. I know of no better software. I use the web version. I can use it on my Apple. I can use it on a friend's computer. I can call it up, put in my email address and code, and bingo, I am right in there. I have people write me all the time, hey, I can't find the PPO, which is our main indicator, on Thinkorswim. Well, why aren't you using Thinkorswim? I mean, maybe it's free, but again, I'll pay a few dollars a month to have the premier stock trading, I believe, charting software there is. And it's so easy. And we actually give you the chart we use for free. So again, encourage you to sign up. Now, we see that we had a 2-day crossover going down. It's not a recross because it's not moving in the direction of the weekly. It's crossed over going down, which if you were still in, you would, of course, pulled that trade. There would have been many good reasons why not to be in, but by all means, with the crossover now confirmed going down on the 2-day chart. What about that 4-hour chart? We saw some indecision in the morning, and again, down movement in the afternoon, down 0.63%. We're going to leave the S&P 500, go to the NASDAQ 100, going to the second week of sideways sliding down movement. Look at that price percent oscillator. It's tracking down a little bit. Derivative oscillator has been losing momentum going into the third week now. And of course, we had the 2-day, as we go to that, we had the 2-day crossover all the way back on Friday the 24th, just followed up by more. Now, you will note as we pull the 2-day crossover away that it's not reached a lower low over the last 2 days, but price, of course, is moving down, and it has pierced the weekly trend line. So by all means, there's no good reason for you to be in the queues at this point. See that derivative oscillator gaining lots of downward momentum. We now go to the half-day chart. What do we see there? A little up movement there, or slowing down in the up mover in the morning, and then more down movement in the afternoon, peaking lower, down 1.27%. So decided weakness in the NASDAQ 100, still confirmed up move, okay, on that weekly chart, but that 2-day has been moving down. Now, if we had things bound back over on that 2-day chart moving up, we had what we call a 2-day recross, well, by all means, you would jump in and do a practice trade there, or at least consider it. Have good reasons for not doing so. Let's go to 20-year bonds, closer and closer to a weekly vertical crossover going into the, I believe this was the 7th week, yes, of up movement. Price percent oscillator still negative, but again, derivative oscillator has gone positive, and the price percent oscillator getting ever closer. Go to the 2-day chart. And of course, we see that we've reached a higher high than these prior candles, keeps moving up. Price percent oscillator moving up, derivative oscillator moving up, half-day chart. We can again see where things up a little in the morning, further up in the afternoon. Was getting a little close as it was heading down, but it looks like it's just running parallel right now to the red signal line as far as the price percent oscillator goes. Derivative oscillator still losing upward momentum. So perhaps by the end of the week, we'll see TLT crossover going up. Now remember, bonds typically are a safe haven when stocks aren't doing well, and with stocks losing energy, seeing bonds move up is a good sign that that may continue. And you might say, who wants stocks to go down? My friends, we want to be able to read the market and do what the charts tell us. We want the charts to work. And again, we really don't care if the market, that is the stock market, is up or down, as long as we know the direction. When you look at when the market crashed, when COVID started, we had a great signal. When things crossed over, we had a weekly vertical crossover, and we watched it plumb the depths. And then when it turned over, confirmed its up move for us back at the somewhere around the 286 mark, went as high as 286 to 327. So again, quite beautiful over that period of time. Now, let's keep moving through these charts. We go to gold. And of course, we had that 2-day vertical, that weekly vertical crossover. At the same time, the 2-day crossover occurred, going up on gold back on the week ending Friday the 26th. Our jumping in point was somewhere around the 165, 166, I guess, mark. And of course, reached a high. This is so beautiful. 182.80. No, 184.26. Bam. And look at this week so far. 2 days into a 5-day candle. Incredible. Pushing up through the Bollinger Bands, which are volatility bands showing you how much things are pounding up. Price percent oscillator like a hockey stick going up. Derivative oscillator gaining upward momentum. 2-day chart. Look at that. Just continuing to rocket up. 4-hour chart. And again, nice up in the morning, higher in the afternoon. So again, gold continuing to look beautiful. Those of you who jumped in to that trade, I know you are happy as gold hits higher and higher bounds. That is beautiful. But again, keep your eye on the prize. Take your profits where you think they are due. And again, watch these charts. Always recommend that you look somewhere around 11 in the morning after idiot hour, which is from 9:30 to 10:30. Market makers have a lot of control things bound all over the place, but they settle out around 10:30, 11. Check out the market then if you're in a practice trade, and then sometime around 2 or 3. And again, if you're waiting for a weekly vertical crossover, a 2-day recross, you want to really be there toward the end of the market, around 350 before the market closes at 4. You want to know more about what we do, why we do it, how we do it? You got to have the book. We've been sending out a lot of those lately. An autographed copy is available for you. Follow the link in the show notes. We'll send it to you wherever you are in the world. Folks, that's where we are as we end the day. Now, we're going to get on to those other charts as I promised, but those of you who just want the 10 to 15 minutes dealing with those first 4 big charts, we are done. God bless you. Remember, on Wednesday, what do you do at the close of the market? You go to your weekly chart, you forget about everything else you've seen, and you just study that weekly chart. You sit back and let the weekly chart speak to you and give you a good feel for where things are really going. Get out of the minutia, concentrate on it. I think I'll put that training out tomorrow for you about pushing back, sitting back, pondering. Now, let's head on to Bitcoin. Bitcoin up for the day, up for the week, up 7.37%. Bam! That is heading up after just lollygagging around for weeks and weeks. Look at the derivative oscillator. It's gone green. Price percent oscillator spiking up. Look at that big green up candle. 2-day chart. Check it out. We told you to watch for it if you were interested in Bitcoin. Toward the end of the day, jumping into the crossover, going up. That was the 2-day recross. Did you do it? Did you check the market out around 350 to hop into Bitcoin? I hope you were paying attention. And if you were interested in charting Bitcoin, something for you to consider. Now again, that we see that is confirmed. That is a 2-day recross going in the same direction as the weekly chart. If you want to practice trade Bitcoin, that's a way to do it. You see it up in the morning, further in the afternoon. So that's where we are with Bitcoin. It's nice to see it catch fire. Now, let's keep moving through these charts. We go to real estate. Check it out. Real estate up 1.99%. Now, I see it still looks lackadaisical because, you look at what real estate did. It lost so much and then popped up and then sort of slid sideways. But look at that. Price percent oscillator trying to head up. Derivative oscillator still losing upward momentum. 2-day chart getting closer and closer to crossing over, going up, but didn't manage to do it for the close of the candle. So we'll keep watching and see if it does it by, now again, that was Monday, Tuesday. So what will it look like on Thursday if you want to jump in, if there is a crossover going up, if real estate continues to move up in the morning, further up in the afternoon on Tuesday, that price percent oscillator moving up, derivative oscillator moving up. Good to see real estate gaining some. Now, what about oil? Boy, oil, remember we had that weekly vertical crossover back on the beginning, the week ending, the first 2 days of movement in the market in July, the week ending, that was an early week. The 2nd of July, remember we were off Friday the 3rd, so that was a short week, but we had that weekly vertical crossover, and we've continued to see oil try its best to track up. We're not reaching a higher high so far this week. Like we said, oil down 1.24% for the day. We can see where oil peaked on the 2-day candle back on Wednesday the 22nd, and it went from a red open box spinning top to a solid red, which is showing more down movement. We go to the half-day chart, and we can, of course, see down in the morning, a little further down in the afternoon as far as the candle body goes. So if you're in that practice trade on oil, keep your eye on things. Lastly, we go to silver. We talked about silver a few days ago because you guys were asking about it. Of course, Silver's quite readable on our charts. We had the weekly vertical crossover on silver. The time to have gotten in was way back in mid-May, the week ending the 15th of May. And we see silver just gaining momentum. It was down for the day 0.26%. But again, we look at that weekly candle really spiking up. Price percent oscillator heading up, derivative oscillator. 2-day charts, nice big green up candle. All that movement that you see there is what happened on Monday. Like we said, a little bit of a pullback on Tuesday. We see the price percent oscillator heading up, derivative oscillator gaining upward momentum. Half-day chart, again, you can see where all the up movement was on Monday. And then Tuesday, we see things flattening out on the price percent oscillator, derivative oscillator continuing to lose momentum. But before I finish up, I want to show you where that 2-day recross was. So once it crossed over going down, silver crossed over, would have pulled you out of the trade most likely around the 22nd of June. And then it crossed back over right here, right on the 8th of July. The jumping in point somewhere around the 1721 mark, and of course over the course of a week or so, a couple of weeks, things spiked up to a high of 2297. So that's beautiful. Again, you can see how chartable silver is on our 2-day, and particularly the one that matters the most is our weekly chart. Only place where it got really snaggy, and we talked about this before, was there in about mid-January through about the end of February. Other than that, of course, once it rolled over going down, nice hammer, you saw that happen, and then once it crossed over going up, quite beautiful. But again, we stick with gold. That's the one we've tracked. That is, of course, again, historically, the best that we have found tracking-wise. But silver is something you can sure look at. I mean, don't just look at something because silver's cheaper than gold. You can find this fund, GLD rather. It tracks gold at 10%. You've got another one that tracks gold at 1%. So again, you've got options. And again, what you want to always look for is what's the best trackable ETF or stock. That's the key. You want to be able to chart it. That's it, my friends. God bless. All the best from the whole team at Charting Wealth World headquarters.